All right, so welcome to Coffee with Marcus. Today we have episode 86. This way. And today I'll show you what's happening in the markets so that you know what's going on. And as you know, the markets crashed in the past 3 days. The Nasdaq is down more than 10%. So, why did the markets crash? And is it over now or will it crash another 10%? That's what we're going to talk about today. So, what is happening in the markets? Let's take a look. Now, last Wednesday, I warned that the markets could crash soon. This was only a week ago, and it sure did. So, right here, I talked about the market possibly crashing, and then the next day, it started the sell off. And here, we are looking at the NASDAQ right now, and as you can see, the NASDAQ went down as much as 11% here. So, as you can see, the first day it lost more than 5%. For the next few days, it just kept moving down. And you know what? Don't want to toot my own horn, but I pretty much nailed my prediction. I said the S&P 500 would correct to 3,400 and then bounce back. Well, I was off by a few points. It went down to 3330, yeah, and then bounced back. Well, close enough, right? So anyhow, why did the markets crash? And will they keep crashing, or is the worst over now? And that's exactly what we're going to talk about in this video. Now, in order to answer the question, why are the markets crashing? Let's back off for a moment. You see, here's why stock exists. A company needs money and they don't necessarily want to borrow it from the bank. So they sell parts of the company to investors, and these are shares. So let's take a look at a company like Apple. Let me go back here. Let's actually go over here to finance.yahoo.com. Take a quick look at Apple here and see how many shares did Apple issue to raise money, because that's what the market is all about. So I'm going to the statistics here, and takes a moment. Here we go. So if we scroll down here, you see shares outstanding. Let me zoom in here a little bit so that it is easier for you to see. So outstanding shares for Apple is 17.1 billion shares. Okay, now let's compare this to another company. Another company that made news recently is Zoom Video Communications. You know, they went up 40% and then started crashing down today, so they're slightly up again. So let's take a look at the statistics here from Zoom. And I will talk about why the markets crashed, but it's important that you understand a little bit the bigger picture here. So Zoom, on the other hand, has 194.76 million shares outstanding. Okay, well, as you can see, this is much less. So we have Apple with more than, 17 billion, and here only 195. So in order to compare these companies, smart people, way smarter than me, came up with the idea of creating a metric, the so-called EPS, earnings per share. Let me write this down so that we have it in our notes here. So the EPS is the earnings per share. Now, what does this metric tell you? Now, this metric tells you how much does a company earn per one share that is issued. So let's jump to Apple and Zoom again and see how much it is. So for Apple, I want to go to finance.yahoo.com. This is where we get some good information here. There we go. And you'll see it right in the summary because it is so important. And you see the earnings per share for Apple is $3.30. Let's write this down. So $3.30. Now, if we go to a company like Zoom that recently has made news, again, you know, during this pandemic here, let's see what the earnings per share is for Zoom here, since we are comparing these two. Okay, we're going down here, and the earnings per share is 78 cents. Let's take a look at this. So not ZM, it's 78 cents. There we go. Now, as you can see, Apple is much more profitable per share that they issued than Zoom. Well, no surprise there. Now, what does all this have to do with the market crashing? Bear with me, you'll see in just a moment. So now that you know about the EPS, the earnings per share, the next key metric that you need to know in order to understand why the markets are crashing or correcting here is the so-called PE ratio. So let's write this down, and just see that I moved this a little bit. There we go. Back in the screen. So the PE ratio, what does this mean? This is the price per earning. Price per earnings. And this basically what happens here is you take the stock price and divide it by the earnings per share, the EPS, the earnings per share, right? So the profit of the company. And now the PE ratio tells you how much overvalued or undervalued a company is. Now again, let's take a look at the PE values of Apple and also of Zoom. And let's see what we find out here. So for Apple, let's actually, since we're already here, let's talk about the PE ratio. No, actually, let's go back to Apple really quick. So for Apple, the PE ratio is... Why did I pick Slacks Technologies? Okay. Come on, FinanceYahoo.com. Don't be so slow for me today. I have a show to do here, and people are waiting. And they're impatient, like me. You impatient? I am. Okay. So, let's look it up here really quick. Okay, there we go. So the PE ratio of Apple is 35.79. So let's say around 36. So 35.79. This means that the stock is trading at 35 times the profit. Now let's quickly look it up for Zoom here. And then you see where I'm going with this and why this is so important. ZM, Zoom. Come on. There we go. Okay. So as we're bringing it up, we'll see that for Zoom, it is, holy moly, look at this. It is 500. Okay, let's compare this. 500.51. So the stock price is 500 times the earnings. That's crazy. So let's actually see what's normal. So here you see the PE ratio. Here we go. You see the PE ratio of the S&P 500 companies. And right now, as you can see, or not, so I'll read it to you, it is 29.28. So let's write this down here really quick. So the average in the S&P 500 is 29.28. So as you can see, it's almost 30, and Apple's PE ratio is 35. So it's close to the average of the S&P 500 companies. But now you might say, you know what, Apple is a tech stock, and we need to know that the NASDAQ is the tech index. So let's take a look at the PE ratio of the NASDAQ, because this is where everybody said it's overvalued. So here's the PE ratio of the NASDAQ, courtesy by White Charts. I'll post the links in the description so that you can look it up for yourself. Now, take a look at this. Oh my gosh, it is 27.04 right now. Let's write this down. So the average in the NASDAQ is, what did we just say? There we go, 27.04. Okay, wait, what? I mean, I thought that everybody was saying that tech stocks are overvalued right now. Well, honestly, looking at this, it seems that they're in line with the S&P 500. And if you take a look at the chart, it is also pretty much in line with the historic averages. So why is everybody saying that stocks are overvalued right now? And finally, we get to it. Why did the market crash? Well, there's a simple explanation. Now, let's dive a little bit deeper into the NASDAQ. Now, the NASDAQ is an index of 100 companies, and here is how they are weighted. So I pulled this out, and this is courtesy of slickcharts.com. Again, I'll post this in the description. And you see the weight of the companies. And as you can see, the top 7 companies make 50% of the weight of the index. Now, we already looked at Apple and know that their PE ratio is at 35 right now, and that's after we just had the correction. So it is still higher than the average, but it is not too crazy. Now, I looked up the PE ratio of the other companies that you see here, because again, the top 7 companies, Apple, Amazon, Microsoft, Facebook, Alphabet, so Google, L, Goog, and GOOG, So they're separate companies here. One is Google, but the other one is the parent company here. As well as Tesla, they make up from the weight exactly 50%. So let's actually jump to our handy dandy notepad and write down what the PE ratio is of these companies. So number one, we already talked about Apple, and Apple is, we just talked about it, 35.79. So then we have number two, we have Amazon, and Amazon is 126. Whoa, right? Let's see if it is as crazy as this as we are going down the list. So for Microsoft, the PE ratio is 37. Number four, for Google, it is 34. So not bad at all. So number five, for Goog, it is 33. And here we come. I'm missing a company. I'm missing Facebook. There we go. Number four was Facebook. I want to say I have 7 companies here, and the PE ratio here is 33. Then number 5 is Google. Number 6 is Google. Number 7, this is where we get to our favorite, Tesla. And you know that Tesla is crazy. So what is the PE ratio of Tesla? 907. Holy bleep. Okay, now as you can see, these 7 guys who are making 50% of the NASDAQ are all trading higher than the average, with Amazon and Tesla being crazy overvalued with 126 and 907 here. And you see, this is why the market crashed. You see, at some point, the big hedge fund guys realize, oh man, we have some crazy stocks in our portfolio. They are overvalued. And so the big guys are taking some profits off the table and sell these heavily overvalued company. Now, if they only sell the shares of these 7 companies, you see, it'll drag the whole NASDAQ down. Now, in a moment, we'll talk about, will this market crash continue? But let me ask you this. Thus far, is this making sense? Is this helpful at all to look a little bit behind the scenes, understand a little bit more about the markets? Because if it does, do me a favor and click on like right now so that I know that I'm not going too fast. So now the key question is, will the market crash some more? Now, let's actually take a look at the markets here, and let's take a look at what happened earlier this year. Because, you know, we are in 2020 and 2020 is crazy. So here we see earlier this year, the NASDAQ lost, let's just mark it down here, 30%. There we go. So can this happen again right now? Will we see a crash like this? Or is it over after the 10% drop? Well, you see, earlier this year, we had this pandemic. We still have it. But earlier this year, nobody knew how it would affect our economy. So the big guys did what they usually do when there's uncertainty, sell and sit on a pile of cash like Warren Buffett. But here's the problem. You're not earning any money on cash. At some point, you need to invest the money again in the market. And this is what you see. Once we had a better idea of how the virus affected our economy, the big guys started buying again. So if you look at the flash crash of 2020, here's what happened. The big guys, which often people call the smart money, noticed that some of the stocks that they purchased went up too much, and they sold them to take profits. But here's the problem, right? You can't sit on the cash for long. They need to earn money, right? I mean, these are the hedge funds, the mutual funds that you have in your 401k. So they invested back again after values are back to normal. And that's what we are seeing today. It's called buying the dip. Now, let me give you a brief summary here. Now you know what the EPS is. Let's actually go back here to the screen. And you know what the EPS is, which is earnings per share. And you know what the PE ratio is, the price per earnings. And you know that the big guys, the smart money is watching these numbers very, very closely. And if they get too high for certain stocks, then they sell some stocks and realize a profit. And then they buy companies with a lower PE ratio. You see, in the markets, money is not disappearing. It is moving. It is moving in and out of markets, in and out of stocks. And this is why stocks are going crazy sometimes. And that is exactly why the markets crashed for a few days and why they are bouncing back right now. Is this making sense? So now you know what is happening right now. It is not that we have a war going on. It's not that we have a new pandemic. This, what we have seen here, over the past few days, if we go back to the screen, is just some simple profit taking. Now, if you enjoyed this video, please make sure to like it. And if you want to see more videos like this, then click on the subscribe button and click the little notification bell, because this way you get notified whenever I release a new video. And also, if you liked it, remember to share this video, and I'll see you in the next one. Okay. But of course, we don't stop here, because I see that there's many questions here around this, and also regarding specific trades. So let's talk about this, and it's so good to see everybody here. Let me grab a quick sip of coffee here out of my favorite mug that you already know. Trade what you see, not what you think. And this is what we are looking at here right now. Trade what you see. And Jay Allen, a great comment, says we should differentiate from the terms crash versus correction. Yes, what we are seeing here is a correction, but if you look at the news right now, if you look at articles, they're calling it the crash of September 2020. It's just kind of crazy here of what's going on. So good to see. And Ray's asking, what time does it start? We start at 3:30 Central Eastern time. So no worries, you can watch the recording here. Good. So Alan is asking, what is your thought on writing covered calls on SPY? As you know, SPY has options expiring 3 times per week. That is correct. RI will be between 4 to 6 months if you sell calls 3 times a week. Based on my experience, there's not enough premium in there. And you need a pretty large account in order to do this, because the SPY is trading. Let's take a quick look here. Why not? Since we're already looking at this. It's trading at 340, so this means for selling one option, all right, you should, if it is, if you want to have a cash secured put, you need to have $34,000 in your trading account. Now, again, for you and I, that might be okay. Alan, for some other traders, it is not. And I highly recommend, if you are selling puts, that you do it cash secured, not necessarily naked, especially not on the SPY. Anyhow. Good. So Juan Pablo is asking, great question. In order to compare EPS between companies, you should do it in percent or no? No, the earnings per share, this is why we have these 2 metrics here, Juan Pablo. We have the earnings per share, and then we have the PE ratio, right? So the PE ratio builds on the earnings per share. And with these 2 together, you don't need to have a percentage, because this is when you get a pretty good idea across all companies. So Juan Pablo, you probably asked the questions while I was still explaining the EPS, but then if you use the EPS to calculate the earnings per share, the PE ratio, then it does make sense. And Dr. Peabody says, it's not even a crash. Absolutely, it's a pullback with a dead cat bounce bull trap. I don't think it's a dead cat bounce. I do believe that now we might go back to the highs, not immediately. It will take a few days here. So it will take a few days. I think that it might take maybe a couple of weeks until we are going in the, let's go back here to the NASDAQ. That's what we are looking at, until we go back to the 12,400 level. But I don't think it's a dead cat bouncing, because a dead cat bouncing would mean that we expect the markets to go further down. I think it might consolidate here a little bit, but over the next 2 weeks, I do believe that we will go up there, maybe even make new all-time highs. Good. So good to see everybody here. And so, I mean, a great question here is a crash in November likely? You see, nobody knows what will happen after the election. I explained it in detail in my previous video, so I'll link to it in the description. So in the previous video, I explained what we can usually see happening until the election, and then we don't know what will happen after this election, because we'll see who will be the elected president after November, right? So we'll see what happens there. That is almost impossible to predict, but I have a pretty good idea what I believe will happen based on data and facts over the next few weeks going into the election. But a good point here. And Juan Pablo says, wow, Tesla is crazy. Amazon is a cash machine. Tesla is just a bubble, personal opinion. You see, I mean, obviously, with this PE ratio, people are expecting that Tesla will make some earnings. Let's take a look at this together because I want to show you exactly how this works. So, I mean, in the markets, companies are never valuated based on what is happening right now. They're being valuated on what traders think will happen. And you see, this is where we have the upcoming earnings. And you see, these were the earnings for the first quarter. This were the earnings for the second quarter. And look at this. This is what traders are estimating for the third quarter. So once the earnings are being released, this, of course, is when the EPS will be adjusted and it might drop down. But yeah, I agree. I mean, 907, whatever we had here, right, is just crazy. Okay. It absolutely is. Ricardo, so good to see you here. Really very much from you, Mark. Thank you. Thank you for being here and watching it. So John is asking, how is it that indices are at or above pre-pandemic highs? That is an excellent question. Even though many parts of the economy are still decimated. Great question, John. So here's what happened. I mean, over the past quarter, as you know, companies actually reported better than expected earnings. And whenever you see something like we have seen here in the markets, that suddenly the Nasdaq is up, for the year, 44%, this is when people are getting really interested in trading. So right now, you see a lot of cash coming into the markets. Now, think about it. Trillions of dollars have been handed out in stimulus money. Now, this stimulus money was supposed to go towards employing people, but we all know that apparently the employment was still doing quite okay. I think we are 10% unemployment right now. So there's a lot of cash that was handed out to companies, to individuals, and then everybody sees, oh my gosh, the markets are rising up, so everybody wants to be part of it. I believe that we had trillions of dollars cash infusion into the market. People are not investing in real estate right now. People have refinanced their homes. There were record numbers of people who refinanced their homes. And what do you do with the extra cash, right? I mean, do you just sit on cash? No, you want to get into the markets. Think about this. All brokerage, all major brokerages, Robinhood, Schwab, TD Ameritrade, Interactive Brokers, they all reported new accounts, record new accounts being opened. So think about it. There's a lot of money coming in there. And John, this is why the indices are above market, because we have the same inventory, but now we have more demand. And as you know, markets are driven by supply and demand. Is this making sense? Okay. Good. So Jeff is talking, did you get filled on the TQQQ call? Actually, we can take a look at this. So let me jump back here. So this is for the wheel trades. It's one of the trades that I did. Here are the trades. In this account, there's just one of my accounts. And yes, if you're new to this channel here, this is a live account. There's $50,000 in there, $100,000 in buying power. So the TQQQ trade, I want to sell a call. So for those of you who are part of the Power Alerts, I issued an alert earlier. I want to sell it for $2. And right now we are trading at $1.82. So Jeff, no, I'm not yet filled. I'm fishing here. And here's why I want to get the $2. So as you know, I do my homework before I issue an alert with you for you. And here's what I saw. Let me make this a little bit bigger so that you can all follow along. This is my income strategy calculator. And you see, this is what I saw. If I get $2, I would make 53% per year analyzed. And as you know, my goal here is to make at least 30%. And I would make $22 per day. If right now, you could, if you want to, you could go for $1.80. You see, it would give you 48%. So if you want to do this and you want to get the call in the market right now, you can do this. For me personally, since this here is the account that I'm trading together with you, where I'm issuing the alerts with you, I will leave it in here. Honestly, if I would not trade this account publicly, if I just would trade it right now, I would probably lower it to 180, because right now, you see, the bid ask is 182 over 190. So you can easily get it right now. Oh my gosh, look at this. The last price here is $1.90. Maybe we go up to $2. We have 6 minutes until the markets are closed. If you're watching this and if you are in this trade, I highly recommend that you sell the call right now. Only if you own TQQQ. So if you're new to this channel and you say, what the heck is going on? What are you talking about? It's a very specific strategy that I'm trading here. It's called the wheel. I'll link to a video in the description that explains this strategy in detail. Now again, this is where if you have received the alert and if right now you're watching it and you can grab $1.90, do it. Don't be a dick for a tick. I will leave it at $2 because again, I'm trading this account publicly here. and I don't want to screw anybody over. I'm super transparent, as you know, with this account. But hey, great question, Jeff. Thanks for asking. Okay, good. Daniel is asking, received an email about Stephen Brooks' option trading service. Was this really you? Yes, it is. I know Stephen Brooks. He's a great guy. He's also trading accounts publicly. So this is why I included his statements. You see, there are not many educators who talk about trading who are actually showing their accounts. And Stephen is one of the good guys who is actually showing his accounts and publishing the account statements from the last 3 months, as I do. As you know, I'm doing videos all the time where I'm showing you my account statements. So he's doing a free webinar. I believe it is in a few days from now. It's super interesting what he does. It's very similar to my trading style. This is why I thought, Daniel, that you might be interested in this. Anyhow, so Todd said, what a great day for the wheel. And that is surely true because... see, I actually today closed the Apple trade. So if you look at the activity of today, I closed the Apple trade. Then we issued another alert for Boeing. And as you can see today, all positions are nicely up, besides SPR, but we are still... Oh, dumb! A classic, forgetting to share the screen. Anyhow. So yeah, I closed the Apple trade today because we were at 90% of profits. CVX that we issued yesterday is doing really well. I mean, this is probably a trade that we can close in the next couple of days, although it expires on Friday. So yeah, overall, it's looking really, really good. I mean, come on, we have three more minutes of trading. Will we go up? Will we go up in TQQQ? This is where I want to go to. Will we actually go up to $2? That's where we want to be. $2. We are trading at $1.90 right now. Again, if you can get $1.90, grab it. Take it off the table. I'm considering doing it myself here. Should I do it? Well, then some people who are not watching this, I'll leave it in for $2. I highly recommend you do it. Okay. So, Caleb is asking, what were you doing yesterday while everything was crashing? I was selling more puts. I was selling puts for the wheel and I issued alerts, right? So it's great. I mean, when everything is crashing, this is when put premiums are high. So this is a good time to sell puts here. Anyhow. Good. Brian is asking, anybody see what the P of Tesla was days ago? I can't remember. What was it? I think it must have been 1,500 or something crazy like this, right? Do you remember? How much was it, Brian? Let us know. Okay. Vic, please talk about QQQ. What is the plan to recover? What are you talking about? We haven't lost any money on this. We have not lost any money on TQQ. So I don't know, Vic, what you're talking about when you say recover. Recover means that you would have realized the loss. I don't know about you. If you're following me and you're trading exactly the way how I do, you haven't lost anything yet. Okay. Good. Vivette says, I was in a meeting when the TQQQ alert came through and missed the $2 premium. No, I mean, you didn't miss it. As you can see, I still have it working there. Right now, Vivette, we have 1 more minute, 30 seconds. Grab the $1.90 if you can. Grab the $1.90, even the $1.80 is fine. Alex says, you're probably not going to get $2. Well, let's see. I mean, we'll see what happens tomorrow. Maybe it pops up tomorrow and I get the $2. I'll convert this order into a GTC order, good till cancel, so that it is active again tomorrow. Okay, so Donna is asking, regarding the wheel, it looks like we are going to own VLO this Friday. Really? Why? How's that? I do not have any VLO here. I don't know what you're talking about. VLO, I think we already closed last week. So Donna, not quite sure what you're doing here. Always make sure that you're closing it at 90% of the profits. I think we did it together here on Coffee with Marcus last week. Didn't we? Not quite sure. Okay. So John says, yeah, we may own TRGP as well. Sell calls? Absolutely. Absolutely. It's great. Okay. So Steven says, EPS is still very high currently, historically. You know what, Stephen? I disagree. I know this is what everybody is saying, but you see, this is why you're here in the show, to talk about facts. So let's talk about facts. Here is the NASDAQ I'm making this a little bit bigger so that it is easier to see. And we are looking at the last 5 years. We're looking at the last 5 years. So yes, in 2018, it was around 20. Do you see it? The PE ratio here was around 20. In 2019, it was around 30. Right now, the NASDAQ PE ratio is 26.99. Now here is the S&P. And the S&P, as you can see, for most of the time, it is between 20 and 30, right? I mean, can you see this? Between 20 and 30. Right now, we are at the upper end. But Stephen, I know what everybody's saying. This is why please look at the facts. And this is why I'm doing the show here, to give you the facts and show you, no, historically, we are not crazy. I mean, in 2017, it has been crazy. But we're not. We're doing good. Anyhow, good comment here. So let's see. Rosario says, Grüße aus Deutschland. Grüße zurück aus Deutschland. Okay. Vivette, the premium, ever since we started doing the show, the premium was above $1.80. Make sure that you're trading the right strike price here. It's 155. Okay. Good. So good to see everybody here. CRCR is asking, Parex Optimizer thoughts or wheel strategy during these times? Both. Do both. I mean, there are some great opportunities. I believe the market will bounce back. Not immediately. I mean, we just talked about this. It might take a couple of weeks here, but that is okay, right? I mean, this was a healthy correction. We need this correction to be able to keep going up. Without this correction, we can't go up in the market. So this was super healthy, and this is why I'm glad that it happened. And so, you know, last Wednesday, a week ago, I basically said we will have a correction, and I told you to which prices here. Caleb says Tesla didn't make the S&P 500. No, it did not. And I mean, so here's the deal, because it's a great question. So Tesla making the S&P 500. Tesla is eligible to be included in the S&P 500 because finally they had four consecutive quarters of making a profit. Yippee-yay. But think about it. I mean, Tesla is just absolutely crazy. We just talked about the EPS. It's completely overvalued. And recently, look at this. It was dropping 35%. Now, if you're including this in an index, I mean, if you're the index committee and you're including this, and again, it's based on market cap. So Tesla would probably be also in the top 7, weighted really heavily. It would whip the S&P 500 index around. And they don't want this. They do not. I mean, in the S&P 500, if they can, they do not want to have a company that is trading at 907 times the earnings, right? I mean, this is where the PE ratio is 907 here of Tesla. And so even if it would be included right now, it would immediately increase this average by probably a full 2 points, right? Just because of this. So this is why, no, it was not included. And I completely understand why. Okay. Anyhow. So Raja says, nice tip on the wheel stock BA. Yeah, that worked out really well today, didn't it? I mean, BA, we entered earlier today, thus far up $80. So that's not bad at all. And we'll hold it until next week, right? This is the idea here. So doing good thus far on this one. Okay. Good. All right. Almond Brown, how do we become part of the alerts? I believe that the team is here. They'll probably post a link. Or you can just call or text the office or send an email to support@rockwelltrading.com. I'm pretty sure that they can help you. Good. All right, so Alan says, thank you for answering my previous question. Well, thank you for being here live. So if you're watching the recording, make sure that you're showing up live. How do you do this? Well, this is where you actually click the subscribe button and hit the little notification bell. This way, YouTube lets you know when I'm going live. Okay, so go back to Alan's question here. One more question. What are your thoughts of doing weekly out-of-the-money covered call and selling deep in the money late puts to increase the ROI? You can do this. So you see, Alan, there's a million ways to make money in the markets. And it's really interesting. Sometimes I'm getting into a discussion in the comments here. either live or after the fact. So if you're watching the recording, feel free to leave a comment. I'm reading all the comments and I'm responding to most of the comments. And this is where I said, okay, what do you think about this or that strategy? Alan, every trader, every investor has a different risk profile and a different appetite for profits, right? I mean, the higher the risk, the higher the potential profits. So what I'm showing here with the PowerX Optimizer and the wheel is, I would say, a rather conservative strategy, because here's the deal for me. For me, it is very important that the profits that I'm generating with trading are, first of all, systematic. Number two, repeatable, so that I don't have the every now and then super duper Tesla trade, that I can do this over and over again, right? And third of all, consistent. So this is very important to me, Alan. I think what you're suggesting here is a viable strategy. For me personally, I like to stick to the two strategies. The PowerX strategy, as you know, this is one of the strategies that I'm trading in right now, since so many are interested in the wheel. I've been showing a little bit more of the wheel. So starting next week, we will talk more about the PowerX strategy, because I know that many of you are interested. By the way, if you're new to this channel and you don't have the book yet and you would like to have a copy, I'll be happy to send you a copy for free. All I ask is that you cover shipping and handling, which is $4.95. It's a hardcover book. There's a link in the description here somewhere, right? So if you would like to have a copy of the book, you can buy it on Amazon. It's probably $20 on Amazon, or from my website for $4.95. Anyhow, so PKO says, BA is Marcus' go-to wheel trade. It is, because Boeing just has a lot of premium, and this is what we are looking for here. Craig, good morning from Australia. Good morning to you. Good afternoon here in the United States. And John, yeah, VLO was closed last week. 90% of the profits. Make sure that you're going for this. Okay. Good. Marina, so good to see you here. Marina says, great information. Thank you. Okay, good. And I see that some of you did some other crazy stuff with TQQQ. That's fine. I mean, whatever works for you. Again, I'm looking at selling the 155 call for $2. And here's my rationale for this, right? I mean, this is why I'm having the calculator looking at it. So I still looking at $2. Maybe tomorrow I'll lower it to $1.80. Let's see what the markets are doing tomorrow. We are still doing good here. Okay. Adam says, TQQQ, there's too much buying power required. Well, this is where, I'm sending out a lot of alerts. How many alerts did we send out in the last 2 days? I think 3 alerts, right? And you will see some of these alerts require little buying power. I remember KSS, Kohl's, only required $1,800. Some require more buying power. This is why I'm sending out the alerts, so that you can take the ones that fit your account best. And every trader is different, right? So if you have a smaller account, it makes sense to rather trade the smaller ones like VLO, CVX, KSS, Uber. I mean, these all were alerts that are great for smaller accounts here. Okay. Good. Odie says, sold QQQQ at $1.90. Good for you. Okay. Got in at $1.90. Good. That's great. That's great. Okay. Good. Markets are closed right now. Kathy got $1.89. You know what I say? Don't be a dick for a tick, right? I mean, $1.89, it's fine. Okay. So the TQQQ call, $1.67. All right. When Pablo says, I really like the average PE measure. Did not know it. Thanks. You are very welcome. And I mean, this is my goal here with the show. So again, if you're new here and if this is your first time, in this show, I show you the strategies, the tools, and the mindset that you need as a trader. And when I'm not showing you a specific strategy, because I don't want to talk about the same strategy over and over again, this is why I have videos here in the description. But I want to give you the facts about the markets, because I see that there's too much hype going on in the markets and also too much misinformation. So if this is your first time here and you're enjoying it, do me a favor and click on like. And also, if you would like to see more videos, check out the videos that I have on my channel here, and always make sure to subscribe. And feel free to leave a comment. If you're here live, I go through as many comments as possible, but they're flying in. So if you're watching the recording, leave a comment and let me know how you're liking it thus far, if this was helpful at all, or if you have a question, and I'll be happy to answer it because I do look through all the comments. Okay, so Benito is asking, should we buy Apple now? No, I'll see if I can sell more puts for Apple. So we'll see what happens here. Okay. Anyhow, good. So Todd, super smart guy, sold the TQQ at 205. You got it. Okay, good. Dean says, good job on anticipating the Thursday, Friday adjustment range. Again, it's not a secret. If you know a little bit about the markets and you know how to use some of the tools that are available, it's easy. By the way, if you missed the previous video where I basically predicted how much we will go down, take a look at it. I'll post the link in the description here, or probably also somewhere here in the chat. I showed you exactly how you can do it as well. So it's not that I have the magic wand and know everything. I'm showing you how I do it and how you can do exactly the same. Manoy said, received your copy, love reading it. Thanks for getting it. I'm glad that it finally arrived in India. Right now, international shipping is kind of crazy, right? With all this COVID and pandemic going on. So it might take a few weeks if it is international. If you're in the United States, it goes fairly quickly. If you're in Canada, you are already international. I have no idea why we can deliver the book within a few days to North Dakota, but we cannot deliver it to Canada in a few days. It takes weeks, and this had something to do with right now goods crossing international borders. I don't know. Okay, so Monica is asking, can you give us the links you used in the beginning of the show? Yes, I will post them in the description after the show is over. So I'll give you all the links to these resources that I have here. The S&P PE ratio, the NASDAQ courtesy of YCharts, then FinanceYahoo.com, and also this is courtesy of Slick Charts here. The components of the NASDAQ 100. I just Googled it, right? And I'll be happy, Monica, to post the links here in the description. All right, good. Selva says, I started watching your videos recently. I watched your option strategy explanation. Was very clear with the notepad. Good, I'm glad. Can you tell me, should I sell debit spreads and what would happen after expiry? Selva actually did a whole video on call debit spreads. And I believe we have a playlist. We'll link it in the description or in the chat here. So there will be, in this chat, there will be a playlist that explains this in detail. So Caleb is asking, looks like you have 6 positions. Are you a little bit over the limit? Yeah, I have 6. I wanted to have 5. I'm pretty sure that we can close out probably, might close out CVX or Boeing. Which one? No, Doku. This was it. So I think that possibly tomorrow we can close out Doku. This was a trade that we entered yesterday because, again, we're going for 90% of the profits. Sold it for $90. And you see the last traded price was $13. So 90% of $90 is 9 cents. So if tomorrow we can close it for 9 cents, we'll do this. And I kind of anticipated this. I just, right now, you see, Caleb, when the markets are going down, this is when you can get a lot of premium for puts. And I assume that for the next few days, we might not have any more opportunities if the market goes up right now. And this is why I thought might make sense loading up. Also, I have quite a few CVX and Doku that expiring in 2 days from now. You see here, DTE, days to expiration, 2 days from now. And this is why I personally decided to take a 6th one in. As you see, I have enough buying power here. I still have $33,000 in stock buying power left. And I still have $16,000, almost $17,000 in option buying power left. So make sure that you watch your buying power. And I highly recommend having no more than 5. But please, this is just a recommendation. You know your account best. Okay. Good. Helena says, I was not able to get into the session 84 and have not been able to locate the recordings. Where are they? Let me find them for you and we'll post it either in the chat or in the description. Okay. Good, good, good. As Kelly says, new to alert, still learning how to place the trades. Roger says, great books. The PowerX received it in the Netherlands after 6 days. Really? That is fantastic. So maybe shipping is getting faster. Okay, if you would like to have a copy of the book, I'll ship it to you for $4.95, no matter where you are. So yes, I am, trust me on this, I am losing money, but I want to get this book in your hands because I believe that once you have the book, you might also be interested in the tools that I have, and we become friends for life, right? So this is my idea. This is my hope. Anyhow, so good to be here with everybody today. We'll be back in 2 days on Friday. Again, we are going live Monday, Wednesday, on Friday. Coffee with Marcus. If this was your first time here and you enjoyed it, do me a favor, click on like. If you think that this information today about the PE ratio and why the market crashed was valuable, please feel free to share this video because there's too much stuff out there that is just an opinion. And on this channel, in these videos, it's all about the facts because as you know, I highly recommend for you and for me that we trade what we see, not what we think. And don't let the media hype anything up here. Okay, all right. Have a great rest of the day, and I will see you in the next Coffee with Marcus. Take care, everybody.